And think about those fancy, pricey trading strategies. Well, we've got something a lot simpler. It's a super easy strategy that works across the board: stocks, bonds, futures, forex, crypto, you name it. Whether you're a trading pro or just starting, the strategy is totally free and straightforward enough for anyone to use. Let's get into it. Start by heading over to TradingView and pulling up a 15-minute Ethereum chart. We're going to add a powerful tool called the liquidity weighted super trend. This isn't your usual super trend. It's smarter because it considers trading volume. Adding it as a breeze. Find the indicators section at the top of TradingView, click on it, and type in liquidity weighted super trend in the search bar. When you see it, click to add it to your chart. Now let's fine tune the liquidity weighted super trend to get even better signals. Open the indicator settings and go to the Inputs tab. This tab is your control center for customizing the indicator. As for the super trend type, change this to smoothed. It softens up the indicator signals, giving you cleaner, more reliable trends. Keep the factor at the default of 1. This factor decides how sensitive the indicator is to price shifts higher values. Make it more sensitive, while lower values make it less reactive. The default setting works well here. Set the super trend length to 14. This length determines how far back the indicator looks for trends. A higher value focuses on long-term trends, while a lower one picks up on recent movements. A length of 14 strikes a good balance. Change the fast mail length to 7 for short-term responsiveness, and the slow mail length to 45 to capture long-term trends and provide a stable signal foundation. Now, jump over to the Style tab. Turn off the options for super trend plots, and make sure the down arrow is set to above bar and the up arrow to below bar. Turn off the plot background option too. This customization makes your buy-sell signals more accurate and easier to spot. Let's decode the signal. The red arrows above the candles are sell signals, while the green arrows below are buy signals. Keep in mind though, that no indicator is perfect. Sometimes you'll get signals that go against the main market trend, but don't worry, we can filter these out. Before we dive into that, if you're enjoying these tips, hit the subscribe button and turn on notifications so you won't miss out on more powerful strategies. Now, let's add an extra layer of confirmation. Go back to the indicators section, search for Gaussian filter, and add it to your chart. This filter is like a supercharged moving average that uses Fibonacci numbers, offering more stability and trend analysis. Open the settings and set the Gaussian level depth to 200 to look further back in the trend. Set the extra smoothing to 14 to reduce noise, ATR period to 27 for better volatility adjustment. In the style section, adjust the look for clarity, turning off the show signal option since we're using this as a trend indicator, not a direct signal generator. Now, let's break down how to use these indicators together. When the Gaussian filter line is green and the price candles are above it, the market is trending upward. Look for buy signals, green arrows at this time. Once you see a green arrow, enter a long trade at the close of that signal candle. Set the stop loss slightly below the most recent swing low. Finally, aim for a 1.5 to 1 risk to reward ratio. For every dollar you risk, aim to make $1.50. But if you want to know how to make way more than that, plus how to make it work and eliminate as much false signals as possible, you need to watch the entire tutorial. On the other side of the coin, when the Gaussian filter line turns red and the price candles are below it, the market is trending down. Here, look for sell signals. Place the stop loss slightly above the recent swing high. Use a 1.5 to 1 risk to reward ratio, again, to maximize your gains. The Gaussian filter helps you ignore counter trend signals, which is especially useful in choppy markets. For example, if you see a red arrow in an uptrend or a green arrow in a downtrend, you can confidently ignore those signals. Now let's see a part of back and forward testing it, following with the results. Join us on this journey as we empower crypto believers with knowledge and tools to achieve their goals. And guess what? We're just getting started in this world of endless possibilities. Click the link below to join us now. Enjoy 0 fees on spot trading for the first 30 days and a chance to win up to 30,000 USDT in deposit rewards. Join Bybit today and ride the wave of crypto success. Before wrapping up, remember that every trading strategy works best when you back test it. We've tested this setup across hundreds of crypto and Forex pairs on various time frames from 3-minute to weekly, and the results look promising. But keep in mind that real-world factors like spreads, fees, and mindset can affect your results, so take some time to backtest and see how it fits with your style. If you want to achieve such results, check out the videos on your screen. One dives into advanced Fibonacci levels, another shows how to automate the strategy alerts, and the third is a must-watch viral strategy. Thanks for watching, and as always, may the charts be in your favor. See you in the next video.